Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com. And welcome to this week's supply and demand market analysis. If you're new, welcome. And if you are returning, welcome back. Please don't forget to like, subscribe, and share if you find my analysis useful every week. And before we get into the fundamentals, I just wanted to do a special mention to one of the traders, Captain P, who had his first 1,000 pip trade today. Brilliant, well done, and it was on the pound Australian dollar, mainly due to the fundamental analysis that we do in the group. So well done to Captain P, who had a 1,000 pip trade. Shout outs to him. Anyways, let's get into the fundamental analysis. So Fed Powell beats drum for more government aid to bolster the economy, which basically means more money printing. So the US economy is beginning to recover from the worst of the COVID crisis. Everyone is, but with some 25 million Americans displaced from work and the pandemic ongoing, it will need more help. Federal Reserve Chair Jerome Powell told lawmakers yesterday. Basically, more money printing, more bond buying, purchasing corporate debts, etc. So it's literally again devaluing the currency, and really all central banks and all countries are trying to devalue their currency. It's actually something they're actively trying to do by things like cutting rates and interest rates and quantitative easing. So Bank of England boosts quantitative easing but slows speed of purchases amid market stabilization. The Bank of England has expanded its QE program, did it on Wednesday, or was it Wednesday? I think it was one of those days, 18th of June. I think that was the Wednesday. But more importantly, the calmer rate market conditions have given policymakers enough confidence to slow the pace of purchases. Still, this is the important bit, still the myriad of risks facing the economy suggest that the Bank of England could come under further pressure to do more, and that will undoubtedly fuel discussions of negative rates. Right, so negative rates still on the table. So again, in Forex, what we're looking to do is trade divergences. So what we're divergences in, a trade idea is a divergence in interest rate policy. So if you've got a central bank that is potentially holding rates and a central bank that is potentially cutting rates, then you want to really sell the one that is cutting rates. Yeah, or is probably going to cut rates first. And the Bank of England are potentially looking to cut rates into the negative. Well, that's the rumor anyway. Whether they do or they don't, who knows? But it's buy the rumor or sell the rumor, in this case, short the rumor, with the Bank of England. So also as well, we got central banks have put a floor under European equity markets, and not just the European equity markets, it's everywhere. So an interesting article I was saying with the guys in the room is that if we scroll down, an analyst, Suzanne Hutchins, who's a portfolio manager, said that the market could go sideways for a bit or fall for a bit, but it's definitely not going to be back to levels we saw in mid-March. Yeah, and the reason why is that the central bankers are acting as a backstop, a put to the market, because they buy the assets that everyone else wants to buy, forcing investors to take risk, and the excess liquidity means equities could go higher. So they're taking on all the bad stuff and really supporting companies who are really should have probably just gone bust, filed for bankruptcy, etc. So if you are looking at the stock market as a stock market price as an indicator to really kind of judge on sentiment, risk sentiment, whether risk is on or off, you might want to take a second think about that, because price is obviously being supported and manipulated, whereas price should potentially be dropping. Central banks are actually acting as the backstop, right? So prices aren't moving efficiently as they should, right? So the market prices are being supported and manipulated. So what does that mean? When you're looking to potentially, buy or sell anything, and one of the things that benefits from market manipulation and weak I guess currency devaluation is potential gold. This is not financial advice, but I'm just telling you what typically benefits. So gold rises as Fed power sticks to view on risks to recovery. So it's all about gold rising for the first time in 3 sessions as US Federal Reserve again flagged risks to the economic recovery from the coronavirus pandemic. So again, risk off sentiment and safe haven plays. Money typically goes into safe haven assets like gold and silver and some others as well. So again, as a trade idea, which is what we do first before we look at any kind of price chart, is do our fundamental analysis, get our trade ideas for the week, for the month, whatever it is that we need to do, and then we look to the price charts for any kind of dips and buying opportunities. So looking forward to this week, trading economics the week ahead. Investors will continue to monitor the spread and impact of the coronavirus as a spike in new cases in the US and China raised fears over a second wave of infections. Meanwhile, GDP, consumption, durable goods, existing and new home sales and flash PMIs for the US will be keenly watched. So a busy week for the US. Elsewhere, monetary policy decisions, which is always important in China, Turkey, Mexico and New Zealand. So if you're trading the New Zealand dollar or any of these currencies, but especially the New Zealand dollar, is going to be watched, as well as flash PMI surveys for the UK, Eurozone, Japan and Australia will be in the spotlight. So I would probably say the fears would be definitely one of the driving factors potentially of price in the coming weeks and months. And also specifically, I would probably say the New Zealand dollar monetary policy, as well as GDP as well for the US and also China, because China is the world's economic engine. If they start to slow down, then it really kind of affects everybody. Anyways, let's get into the technical analysis for this week, and starting off as we always do on the US dollar index, which is a measure of dollar strength against the major currencies like the euro, the yen, the pound and the Australian dollar. And last week we did come down into, or a couple of weeks ago we did come down into a nice area to look for potential buy trades or dollar strength, not necessarily buying on the dollar itself, right? But we just use this as confluence, and if prices start to push higher and reverse from here, then it's used as dollar confluence on any of the other currency pairs. Sorry about the motorbike down the road. So so at the moment now, we're looking at potential. If you look to buy the dollar, you're looking to buy the dollar, then you are going to be looking at that as an area of demand. I'll keep the demand. Actually, I'll just do it a bit higher so it kind of encompasses all this. All this is kind of like demand as we've got higher highs, higher lows being made. So if you are looking to get involved in this, then I'll probably say you do have an area of support and resistance within this demand zone as well. So that is a decent potential buy if you get a pullback on the dollar, and then you start to see a nice bullish price action there as confluence. If not, then anything probably below here and around here for potential confluence to look to buy the dollar if you want to be a buyer of the dollar. If you're looking to get short, then this is a nice area of confluence supply here for any kind of short trades on the dollar. Moving on to the dollar yen, and the dollar yen this week really hasn't moved anywhere. This week has been a bit of a quiet week as far as price movement when we consider what's happened here within the 3, 4, 5 days, and then all of a sudden we've kind of gone a bit sideways, accumulating potentially. But if you do want to be a buyer of the dollar, now's a decent time to look to buy, or looking for prices to really kind of come up here. If prices do come down to this area here, nice area I think of demand, then that's decent as well for a dollar buy. Remember that the yen does strengthen in a risk off environment. There is a little bit of supply here, not the strongest area of supply, but I will draw it here. Not strong area, but if you are looking to potentially get short, that's an area that you could look towards potential short trades, but it would have to really kind of prove itself, make lower lows before pulling back to that level of supply. Moving on to the dollar Swiss, again, just gone really sideways. 1, 2, 3, 4, 5 sideways days, no real price action going on here, so pretty much the analysis really hasn't changed. It's just a case of, if you want to get short, probably wait for a pullback into this zone before looking at getting short there. If you're looking to get long, again, there is a bit of demand here, but not much, so I would probably say, again, a pullback down into that zone, into that demand zone there, before looking at getting long on this this currency pair. And again, typically the Swiss franc does strengthen in a risk off environment, so does the US dollar, to be fair, but you would, if risk off does really come into the market, then the Swiss franc would be the one to buy. So you'd get short on this currency pair. Dollar CAD, again, dollar CAD literally just gone sideways. I think, like I said, a lot of currency pairs have just been in that maybe like the accumulation phase. So again, nothing really much has changed. Any kind of short trades at the moment is you're looking for that level of supply, and then I will move this up here. There is some demand here as well. All right, so I guess, and especially from this area here. So if you do want to get long, then you're looking for pullback into here, or if prices do go to the upside and make higher highs, then you're looking for a pullback into that demand zone there before looking at getting long. Moving on to the New Zealand dollar, US dollar, again, nothing but just sideways market movement, sideways this week. So again, not really much pips to be had if you are looking at the the higher time frames. So again, looking at getting long, getting short, pullbacks into that area there before looking at a short trade. If you're looking to get long, then now really isn't a great time. I would definitely say this area here before looking at getting long. Pound dollar, and pound dollar has moved as we've expected it to. I've been saying this for a while. Probably get short on the pound. So again, I think the best opportunity really for this one, if you are looking to get short, you don't have to, is there a nice little pullback into this supply zone before looking at getting short. If you are looking to get long, then this demand zone, probably the confluence of this support zone within this demand zone, will be decent as well. Right, there is, I guess, you would have also a bit of a support zone at the top of that area there as well. But again, fundamentals come first. So why do you want to be a buyer of the pound? That's the question you have to ask yourself. If you're looking to be a buyer of the US dollar, then you have to really wait for pullbacks to try to look for any kind of long trades. Euro dollar, so euro dollar's finally moving as well to the downside. There was an opportunity to get long again last week. I was saying that this was hidden demand, which it did react from, did kind of pull back a little bit, but now prices have pretty much sold off, so it's taken at a level of demand. Now we've got potential supply right here, so now again it's just looking for pullbacks. If you do want to get short on the euro and buy the dollar, it's anywhere around here, and again, if you're looking to buy the euro, then you're looking for either price to come all the way down to this zone here before looking at long trades, or looking for proof of value for prices to kind of make higher highs, higher lows, and then pull back into the higher low before looking at getting long. Euro yen, again, more risk off sentiment, probably second fears. The fact that the euro rallied during I guess the when they introduced more stimulus was a strange one, but now prices are kind of acting typically as they should. and with potential risk off sentiment, that could be quite nice. So pullbacks into that area there if you want to be short on the euro and long yen. If you're looking to get long euro, then this is going to be the area to get long here, or unless prices again prove that this price area is really bargain, prove that there is demand there, and then you're looking for pullbacks. Moving on to the Australian dollar, US dollar, again just really sideways market movement going on here. So again, pullbacks into this area here, supply, before looking at any kind of short trades if you're looking to buy the US dollar, and then if you're looking to buy the Australian dollar and looking to take advantage of this overall trend to the upside, then this is going to be the first area to look for potential long trades. And again, you've got decent support and resistance within that area, as well as confluence. So just on the top of that demand zone there may act as a nice pullback or a nice buying opportunity if you want to be a buyer of the Australian dollar. Australian dollar yen, and again just literally quiet week. So again, move down before moving, looking to buy if you're looking to buy Australian dollar. If that does happen, then this becomes a stronger area of supply, and then you can look for potential short trades in this area right here, or preferably probably up top would be the better area to look for short trades if you're looking to buy the Japanese yen in a risk off environment. In a risk on environment, the Australian dollar should be the one to buy. And finally, gold. Gold was doing some past analysis on this, but gold making again some higher highs potentially. So with all the money printing that's going on, this is what should typically happen, and this is a nice buying opportunity a few weeks ago. So if you are looking to buy gold, you're either looking for a pullback into this area here before looking at getting long, but also as well, just to note that this area has been touched twice already. So if you are looking to get long, preferably probably just below that level before looking at getting long there. Fresher areas of demand are always the best areas. The more touches of a level, the worse it becomes. Or what you're looking for is proof of value, again, prices to make higher highs, and then what you want is a pullback into proven demand zone before looking at getting long. If you are looking to get short on this, then I think the level above it is decent for a short trade, anything around these highs will be advantageous potentially if you're looking to get short, and potentially if any kind of risk on sentiment comes into the market, then gold may want to potentially sell off. I'm going to delete this because it's touched the above level anyway. So that's pretty much it for now and for this week. So guys, I hope you've had a great trading week, and again, take care, and until the next video, I'll speak to you soon. Hi traders, if this video content resonates with you, why not access my complete supply and demand Forex trading course for less than £1 a day. There is a selection process, as I only want to work with hardworking and dedicated traders only. If selected, you'll also get access to the Trading 180 Discord coaching group, so you can earn as you learn, receive trade setups, join the weekly live video conference call, and get advanced fundamental and risk sentiment analysis so you can make the best Forex trading decisions. Find out more at trading180.com. I look forward to working with you.